Hey everyone, welcome to Wealth Redefined. I'm your host, Michael Reynolds, certified financial planner, owner of Elevation Financial. I'm on the web at elevationfinancial.com. All right, today we're talking about 401k loans, how they work, and when to consider one. So this comes up because sometimes you need some cash to bridge the gap during an unexpected event, or maybe your emergency fund is not enough to cover this emergency or this event, or maybe you have a planned expenditure, a life transition, something where you might need a lump sum of money to make it work. So many people consider withdrawing money from their 401k plans when these things happen. Unfortunately, they often end up paying taxes and penalties on that withdrawal, and that can really diminish its usefulness and do a lot of harm to your financial future as well. So ideally, we want to avoid that. And so there is another option that I'm going to cover today called a 401k loan. So if you've ever wondered, can I borrow from my 401k? The answer is sometimes, and, likely yes, but it comes with a lot of considerations. So before you consider borrowing from your 401k, you really need to understand the mechanics of 401k loans, the potential downsides, and the risks involved. So let's first jump in and talk about what is a 401k loan. So a 401k loan allows you to borrow against your retirement savings in your employer-sponsored 401k plan. It's subject to certain limits and conditions, which we'll talk about. First, you can borrow up to the lesser of $50,000 or 50% of your vested account balance. If 50% of your balance amounts to less than $10,000, you can still borrow up to $10,000. So how do you do this? How does it work? How to get a 401k loan? So before anything else, you need to verify that your 401k loan plan permits loans. Not all plans do. If loans are allowed, then you want to get the plan's loan policy document from your HR department or plan administrator. And this document will outline key details like borrowing limits, interest rates, repayment terms, and any specific conditions or restrictions that might apply. So then you fill out the loan application form. Again, you can get this from your HR department or directly from the plan administrator. And that'll require you to enter some details about amounts you want to borrow, your preferred payment schedule, etc. And then once you submit the form, your application is reviewed by the plan administrator. So approval times can vary, but it shouldn't take too long unless there's complications or there's something missing from your application, for example. So once everything is set up, the loan amount is dispersed to you, sent to you. Depending on the plan's rules, it can be a direct deposit to your bank account, or they might even cut you a check. So side note here for business owners, if you're a business owner and you have a solo 401k plan, you might also be able to take out a 401k loan on that plan. So you want to check your plan documents to see if your plan allows loans. And if so, you can still take out a 401k loan against your solo 401k as well. And as a business owner, this can make the loan lower risk because you don't have the same employment risk or job transfer risk that you would have as an employee. And we'll talk about that in a few minutes, a little bit more on that later. So let's talk repayment terms. If your loan's approved, you'll need to set up a repayment plan. So loan repayments are typically made through payroll deductions. These payments are automatically deducted from your paycheck on a pre-agreed schedule. And this is convenient because it ensures that your payments are made regularly, helps you avoid default. It just comes out of your paycheck. So it's very convenient, very simple. Typically, 401k loans need to be repaid within 5 years unless you're using it for purchasing a primary residence. In that case, depending on your plan, you might have up to 25 years for repayment. Repayment typically happens, again, through payroll deductions, which makes it really convenient and seamless. So what are some common uses for 401k loans? People consider 401k loans for a lot of different reasons, including making a down payment on a house, paying off high interest debt, covering medical or educational expenses, funding necessary home repairs, investing in new business ventures. So each of these scenarios might justify a 401k loan, but they also require really thoughtful evaluation of your financial stability and your long-term goals to make sure it really makes sense. So on that note, let's talk about the pros and cons. So the pros of 401k loans include no penalties. Unlike early withdrawals, taking a 401k loan doesn't come with taxes or penalties. Also, typically no credit checks. The loans don't require a credit check, which makes them accessible, regardless of your credit status or credit history. Also, the interest goes back to you. The interest you pay on the loan goes back into your 401k account, which essentially pays yourself back with interest. So there are plenty of reasons to like 401k loans. However, what are some cons of 401k loans? There are definitely some downsides you need to be aware of. These are very significant downsides. So one is the risk of default. If you don't repay the loan, it becomes a taxable event and also subject to a 10% penalty if you're under age 59 and a half. Also, the job change risk is the big one. If you leave your job, the full loan balance becomes due by the next tax filing deadline. If you can't pay it back, it defaults and is subject to those taxes and penalties we already discussed. That is a big one. If you leave your job, which could happen in that 5-year period, then it becomes due in full. Also, you're missing investment growth. By borrowing from your 401k, you're missing out on potential investments because you're unplugging that money from investments. So that could impact your retirement savings pretty significantly. So because of these downsides, 401k loans are really far from ideal, and you want to be sure you consider them very carefully before implementing this. So the question, of course, is then, should I take a 401k loan? Is this right for you? It should not be a first option. Consider your ability to repay within that stipulated time frame, especially if you're, uncertain if you're going to stay at your employer. Weigh against the immediate need for funds, against the potential long-term impact of your retirement savings. You got to look at all the variables. So one caveat I want to note, which I alluded to earlier, is the job change risk is typically not a risk for business owners. Since you're the owner, it's unlikely that you will leave your quote job because you're the owner. So this basically eliminates the default risk that usually applies to employees. So keep that in mind if you're a business owner or self-employed, since it changes the dynamic of taking a 401k loan. Although the other risks do apply, just the risk of just not being able to pay it back, for example, or the risk of unplugging money from investments. But the job change risk doesn't apply if you're a business owner. So just wrapping up with some final thoughts. So a 401k loan can be a valuable tool if used appropriately, if used with really full awareness of the implications. But before going this route, consider all other options first, and, discuss your situation with a trusted professional as well to help you make the most informed decision. So 401k loans can have their place in the right circumstances, but you want to consider them very, very carefully and be very aware of all the downsides that come with them as well. So keep that in mind. And as always, if you have questions, always happy to chat. You can find me on my website at elevationfinancial.com. And you can always book a complimentary consultation if you want. You can send me a note there, or hit me up on social media. I'm pretty much everywhere on social media. But if you'd like to consider maybe working with me or just kind of getting to know how I work, feel free to book a consultation on my website, and I can answer any informal questions you have along the way as well. All right, with that, thanks for joining me today. Have a great day. We'll see you next time.